Welcome back to the Daily Journal. So let's review the 6 a.m. continuation on NASDAQ from the New York session on Monday. So looking at the 4-hour chart for bias. So going into the session, I still had the same drawn liquidity as the London session, which was this previous day high, which had now become relative highs from the London session, right? So if you haven't checked out my 2 a.m. reversal video from that trade in the morning, go check it out. I'll link it in the description. But this was the drawn liquidity, and the 2 a.m. candle had just created relative highs. So looking at the 2 a.m. candle, how it closed, we have to drop down to the 15-minute for this. We had traded into the new week opening gap. We had swept all that sell side liquidity. We had mitigated the remaining opening parts of the new week opening gap. So we had swept the high time frame liquidity. We had then swept the low time frame. I think this may have been, yeah. So we had also SMT, right? So that's a valid point of reversal. And price then swept these highs and gave us this little pullback. But of course, this was the drawn liquidity. This was the high time frame drawn liquidity. So that's where my eyes were. Now, when I got to the charts and I was doing all my analysis, went from the 4-hour, which is my bias. I then looked at the structure, right? Here's that small money reversal. I'm looking at the 4-hour chart now. I don't know why this is on the 3-hour chart. So I was looking at this saying, okay, great. This looks like this is now a reversal. It's valid over here, right? There's your change of state of delivery. And that's after a high time frame sweep of liquidity as well as a low time frame. And so I'm looking for continuation for these highs at the very, very least. Now, bearing in mind, the 4-hour chart has a massive fair value gap here, right? So, which is more of a void with that huge drop-off. So price could just slice through that. And with no news, we could very easily just get, continuation from this point. So also dropping down, before I drop down to the 50 minutes, of course, we're now putting back into this inversion, and 2, the 0.5 of that inefficiency. Right? Inefficiencies, these wicks are just inefficiencies. You can use them like the same you would for fair value gaps. Can you see how we're respecting that behalf of that, right? So when I noticed that, I dropped down to the 1 minute. I'd also noticed SMT. Do you see how we got to the 0.5 of that wick? Whereas on NASDAQ, we only traded into this fair value gap. So we had SMT. We'd also then had the change in state of delivery here, because this is just one sequence, multiple candles, a sequence of down close candles that led to this sweep of liquidity and then the change in state of delivery, right? So it was at this moment where I immediately got into the trade, late entry, and I was looking for at least 2 hours. Of course, this was that drawn liquidity, right? That's that previous day high, which is now the relative highs with that 2 a.m. candle. And of course, now we had come and taken that out. So yes, the previous day high, that's my drawn liquidity, but the 4-hour buy side liquidity, the previous candle buy side liquidity had been taken out. So I was looking for at least 2 hours. Look, that's 1 hour trades. It's a minimum 2-hour trade for me, right? And I'm looking for this. I'd rather just look to get my 2 hour or get stopped at break even. Your winners have to pay for the losers. So it's either 2 hour or more or break even, right? Unless of course it's a different situation. Say for example, if I'd gotten much lower for whatever reason, and my stop loss could have gone to this protected low, then I'm happy to hold to that point, get a 4-hour trade. I'd even go for the 0.5 of this or even lower, because anything over 2 hour you're fine, but I'll be willing to risk that amount for potentially 3-4 hour rounds. Whereas here, I'm not willing to risk 1 hour here for 1 hour. It's either I get 2 hour or my break even. So that's what I was looking for. And of course, the standard deviation from swing low to swing high And this is another reason why I could have used this point over here, because the swing high that delivered the swing low that then created this reversal, that's where I could have gotten in. And could have traded the reversal here, the continuation, and there I would have got 3.5, as opposed to the reversal would have been just over 2 hours. So again, if you've watched any of my videos, you would have heard me talking about, continuations of where it's at. I was predominantly a reversal trader, and it's important to know how reversals work and to get in depth with understanding these, because of course what follows from a reversal, smart money reversal then is followed by a smart money continuation. But smart money continuation isn't just higher probability, it's also a bit of risk reward, because this is a protected low. And the reason being is that this has moved into not only a fair value gap, but a balanced price range, and then closed above, right up. So that right there, you just enter on the neck candle open, there's your protected low, and look at that banger. Stunner. But of course, that was not meant to be. My trade was, you can see I was looking for 2 hour, stop point to break even. And this is because we had taken out this, that 4 hour buy side liquidity going into the New York Open. You've got to just, you've got to play it safe. Now, had I had, a runner here, stop would have gone to break even as well. But of course, remember, this is a 2 hour trade. Going into the session, it's not worth it. I'd rather get stopped out and then reposition myself. So that would have been an absolute banger. And of course, let's see now what I could have done differently had I stuck around for what happens next. Now, had I got that initial entry in the smart money continuation with that protected low, I would have been safe. And I could have held on to a runner, or let's say, for example, I was actually just going for that drawn liquidity, my high time frame, I would have been able to clench that. Now, here's the thing. When price started to pump, I never chase, right? It's always just wait for the trades to come to me. Now, I had this consolidated here and traded back into this fair value gap, created a swing point which I could have used. Because here's the thing, if I just firm it into this trade, because once we close above that, cool, valid. But then what? Here's my drawn liquidity. Yes, we're in a huge void over here. You could have traded to this, but at this point you're kind of just hoping. There's no strategy behind that. I'm not going to sit in a 2 hour trade when we've just pumped right off the open. That's just gambling. So what I'd rather do in this situation, and what I waited for yesterday, but unfortunately just did not get, was the 10 a.m. continuation and an A+ model of mine, which is waiting for, this would have had to close higher. The next candle would have had to consolidate or expand to leave a fair value gap for price to then trade into at 10 a.m. for the 10 a.m. continuation of the 4 hour chart. Right, so it's the, we traded the 6 a.m. continuation. This would have been the 10 a.m. continuation of the 4 hour chart, right? Of course, we never got that. However, I did manage to get an A+ model trade on gold, which I'll be doing next. So go check that out. The rest of the price action here was, bullish. Let's just see how, and you see what I mean? Like, where's your opportunity to enter? I mean, this is the 15-minute chart. So here for lunchtime, you would have got that continuation. I mean, that's what I typically look for. So let's just jump into that quickly to have a look. So looking at the 1 minute chart, now had this been 10 a.m. and not 12, it's not very clean, but it's not about how it looks, it's about following the logic. So okay, we know there's a fair value gap here. Let's just actually bring the 15-minute chart here, right? So lovely. We know there's a 15-minute gap here. So I'm just going to move this to the side. Look at that swing point. So it's at that point where you start paying attention and looking for the smart money reversal. And of course, we've swept liquidity once. You can see we've swept it again here. Let me just and again here. Then you've had your change state delivery right there. And of course, this is a continuation, right? You've got your 4-hour expanding, your 15-minute expanding. You can trade the reversal, especially when you get a banger risk reward like that. Now, you don't drop your hero with the 0.5 here. You don't have time for that really. You just got to just pop it over there and immediately go for. I mean, that's a stunner. That is a banger of a 5-hour trade. So yeah, that's what I would have looked for at the 10 a.m. Of course, this is now like 7 p.m. my side, so I don't trade anything past 10 a.m. But for anybody who caught this in the afternoon session, bless your soul. And you could have just held on for a runner. Oh, that would have been an absolute banger. Look at that swing points. You're just trading the distribution of this market maker model, which is a continuation of the 15 minutes and the continuation of the 4 hours. So that is an absolute stunner. Anyway, guys, go check out the gold trade-offs of this. That's my A++ model, and I'll see you in the next one. Cheers.